Fair value gaps are basically I'm always doing something on this board. Fair value gaps is a smart money or quote unquote big money footprint, right? It's a big money footprint. So if it's showing you the footprint on the upside, it's like saying, okay, I'm gonna track a deer, right? And the deer is walking up. Do you wanna go to the downside? No, you want to track the deer to the upside. So if a deer is showing footprints going up, you want to be buying, okay? And if a deer is showing footprints to the downside, you want to be selling, okay? So you want to track the deer where it's going, and then you trade in that direction. So the fair value gap is a footprint of smart money, or quote unquote those that have big money to move the market. What's the confirmation to entry if you are in London kill zone? Just use the entry technique that I've showed you. You want to wait for price to dip inside the gap, give you a swing low, close above the previous candle, and then away you go. So you can buy the next candle. Targets, the target is always going to be in the direction of the high time frame, right? So you want to trade, let's say for example this week, right? Euro yen. What were we expecting on euro yen? We were expecting euro yen to continue going up, but we saw that price went into a pullback. So price going into the pullback, we wait for price to turn around, and it did turn around here. So when we buy, where we are expecting price to go to, we want to see price make a new high on the weekly, based on the weekly. So my target is going to be targeting the week high. So if we started the week Monday and then we started dropping, then I'll target that Monday's high as my target once price turns around, and then the weekly high where I'm expecting price to continue going. Right, so you target the weekly high. So right now we'll be looking for price to come here and make a new high for the week, which is this week here, and then this one, which will make a new high on the weekly time frame, because on the weekly time frame right there, that's previous week's high, right? So we want to take out previous week's high and then potentially continue going up. That's what we are looking for. So you're buying very, very low. You're buying very, very low for a very high profit target. So that's why we got an entry here, right? And then we are targeting up there, that one, and then that one potentially. So your entry during London, okay, you're just gonna use whichever time frame you want. If you want the 5 minutes, you can use the 5 minutes, but I would recommend anything 15 minutes and above. 5 minutes is for scalping and I don't like it. Okay, 5 minutes can throw you off. 15 minutes is good. So during London or New York, price is gonna trade into something, and that's the thing that you need to understand. It's gonna trade to either an order block or it's gonna go into a fair value gap. That's it. Two things. It's either gonna go to an order block or fair value gap. Okay, during London. First of all, you know your bias. Your bias is to the upside. Cool. Second thing, entry. You're waiting for specifically during London or New York. London is gonna give you a low. If it does trade to a bullish order block, you can't buy straight away, but I'm just recommending you wait, because as it's trading down, you can see here it's what, creating down candles. So you wait for it to form a, let's use live market analysis, because you might think, okay, this is hindsight, show me something real. right now, what is happening here? We've traded into what? We've traded into a gap, and it's forming a swing low, right? We had this, that, closing above this. So my entry will be on this candle, right? And then my stop, because we have a gap here, which could potentially still fill it, I'll leave my stop loss below the gap, and then I'll just continue going up with it, right? That's it.